I think it's really useful. I do this regularly. I try to rewind my brain to March when we didn't know how this is all going to play out, and then remind myself how it did play out and how lucky we are and how well we performed as a company, as an asset class, really as a country overall. And here's some of that. Some recent headlines in the last couple of days. Consumer confidence for June jumps more than expected. Consumer confidence jumping more than expected. How about US home sales jumped more than expected? Nearly 17%. That was May. June is even better. June jobs report adds more than expected jobs. Better than expected May retail sales. So retail sales, people buying stuff, home sales, people getting jobs back, overall consumer confidence, all pointing in the same direction. But it's noteworthy that I didn't have to try very hard to find headlines that all had a common theme. What's the common theme? That the experts all agree that it's going to be bad, and then they're all surprised when it's not. And so, we started this thing and we talked about how we didn't know where it was going to go, but what might it look like if we had a speedy recession and a speedy recovery? What might that look like? And I sort of hoped for it, prayed for it. Deep inside, I expected it because this is the way things seem to go in this country. We fight our way back. This was fast, though. All right, so let's just say, pray to whoever you pray for that we dodged a bullet here, it appears, and the economy is coming back strong, and every one of these indicators is better than expected. And the next time one of these experts say we're heading into a problem in August or September or October, remember that they almost always get it wrong on the downside. It's just the way it is. I'll leave it to you to judge why. Okay. At the very least, it's because if it bleeds, it leads, and negative news draws viewers because fear sells, right? But I've learned a long time ago that we're definitely in a new reality right now in this sense. You have to have your bearings as an individual because you've got to take care of yourself, probably got to take care of other people. You've got a business to take care of, and you almost are universally being manipulated by the people who write these articles. Okay, almost universally. And so when you look at COVID outbreaks, you have to really understand either who's writing it and what's their motivation, or what are the numbers that you actually trust and what's actually happening. And unfortunately, you have to become an investigative reporter yourself if you want to try to understand what's happening, right? So on a typical day, I try to zone them out because I don't believe them. But like my mom wants to come and visit, right, for my daughter's graduation. And so I had to dig in because I can't just phone it in now. Like I got to make sure I understand what she was in Florida. Now she's in New York. New York had an outbreak. Florida is supposedly having an outbreak. Let me go and look into this thing so I can know if she can come here or not. So when it's consequential, you got to dig in. And what I'm finding is that that you can know what's happening in the world with the media lying, despite the fact that the media is lying to all of us, one way or the other, right? They're all just so full of it. So I'm glad that I finally came to terms with that because now I know how to read these things. Who's writing it? What are they saying? And are they usually wrong? And if they're usually wrong, thanks for the info, but I'll make my own judgment. And the good news is that everything is better than expected. Everything. All right. Now, here's kind of where it lands. Inventory is tight. Okay. Inventory being tight is the sign of a very strong housing market and under normal circumstances. There was one possibility, like usually inventory is tight because it's being gobbled up off the shelves, right? The buyers are buying, the tenants are renting, nothing stays on the shelves very long, the inventory is turning over quickly. The alternative possibility of inventory being tight is nobody's moving. And there's certainly some of that going on here, like people just renewing leases, hunkering down. Our renewal data is we're up a little bit in renewals, people staying put that probably otherwise would have moved. Our days on market right now is 28 days. So we're within a month. We've been over 33, 34 days all for the last 12 months until the last few months now we're under 30 days. So you're rocking it out there. I'm sure you feel it, right? Quick decisions being made by people. But I really do believe that the overwhelming buyer demand, which is what you want, if the inventory is tight because the buyer demand is so robust, that just means that we have to hustle as always. But it doesn't mean there's any kind of an economic headwind. The tailwind is the economic piece. People are buying. People are absolutely moving out of the cities into the suburbs. My family owns and operates a real estate company in the suburbs of New York City. They had their biggest month of home sales in company history, 35-year-old company, biggest month of home sales, $7 million in revenue um, in June. Okay. So, and that included the housing boom of 2003, 4, and 5, and 6. It included everything. Biggest month ever. So again, home buyers is an indicator of tenant movement. It's an indicator of mobility of people leaving coastal cities, going to the kind of cities that we usually serve in most of our cases. Everything is working in our favor, and so it's absolutely continue. It was the right thing in March, April, and May to pound as hard as you could without burning yourself out, of course, but to stay energized and stay focused and take action as often as you could, because it was survival mode. We didn't know what was going to happen. Now it's gold rush mode. Same conclusion. Let's bang it out. Let's keep pounding. Let's push ourselves out of our comfort zones. Okay, so home buyers overwhelming.